Hey, this is James Pelton, and I'm going to have a little shorter video today, and I have some big things in plan for after the holidays. I bought a second Town Star NFT, so I'm excited to show that to you after Christmas, and I also am setting up a Dash Diamond node. So this is an actual node. It's actually running validation for the Diamond Dash protocol, and it's pretty profitable, so I'm excited to show you that. But I'm going to wait till after Christmas for that. Today, I kind of wanted to just show you with the markets being pretty much up across the board. So Bitcoin's up, and again, everything follows Bitcoin. But notice there are a couple things that are red, and you'll notice the things that are red are Ring Financial, Galaxy Goggle, Spartacus, which is another DAO, and Zeus, which is another DAO. Okay, so it's still these DAOs and these nodes. And I know especially on Ring Financial, I'll be getting a lot of questions about that. And people put strong nodes and Ring Financial in the same category. And they're not actually, they're completely different type. Even though these are called nodes, they're not, and I've talked about that in other videos. And I'm really sorry if you've lost some money on Ring Financial. I have a little bit invested in them, and so I've lost a little bit, but most of my money I've put in Strong, Wonderland, Olympus, and projects like that, and so I'm up. And I kind of want to just talk through, just for a minute, about how I think about risk. And how I decide which projects I'm going to put a little bit of money and which projects I'm going to put a lot of money. I think I just want to protect people. Again, this is not financial advice. I have to say that in all my videos so I don't get sued. Not financial advice, but I just want to show you how I think through risk and potential return. And I'm going to do that with a chart, okay? And this is not a TA chart, okay? Anyone who talks to you about the short-term price of Bitcoin or any other project I'm convinced does not know what they're talking about, okay? No one knows the short-term price of anything. So that's not what I'm doing here. I'm not going to draw those type of charts. Here's what I want to draw you, and I hope, are the snowflakes distracting? No, I like the snowflakes. We're going to leave them on. If you get bored, you can watch them. So I'm going to draw three things. It's not going to be a long chart. The first thing I'm going to put on this chart is adoption, okay? What do I draw here? Adoption. Okay, and I have bad handwriting. One of the reasons I became a computer programmer was because I have bad handwriting, and you can type. But here I'm going to actually write it out. Adoption, okay? So when a project first starts out, adoption's really low, okay? So this is going to be the bottom of the screen is low, the top of the screen is high. So when a project first starts out, there's not very much adoption, right? Nobody knows about it. It's a new project. So day one, nobody knows about it. Then over time, a few more people. Then usually there's some kind of a hockey stick where like maybe somebody big tweets about it or something. Maybe some YouTuber makes a YouTube video. It starts to get more adoption. And then maybe there's another inflection point here of it comes out on the news for some reason. And then over years, maybe eventually the project ends up here where everybody has it. Okay, so let's look at this at the beginning as maybe like a bank account. Okay, when banks first started, there wasn't very much adoption. Okay, but over time, people started, oh, look at these checking accounts, savings accounts, and they got more accepted until the point now we're at now, everybody's heard of a bank account. Okay, or the stock market might, when the stock market first started down here, hopefully you can see my mouse, or this is going to be a really lame video. But when the stock market first started, there wasn't very much adoption. Then over time, more and more people got involved. And now I'd say like we're right here, maybe in adoption on the stock market. Okay, not everybody's involved, but everybody knows about it. A lot of people have heard about it. Okay, so that's adoption. The second thing I want to put on this chart, let's make it green. I should have done Christmas colors. That would have been better. Rats. Okay, oh well. But let's put in the green potential. Oh man, why do I do things with so many letters? Potential profit. Oh my gosh, this is so hard. Profit. Okay, so potential profit. And potential profit is pretty much exactly the inverse of adoption. Okay? As more people use something, it becomes less potentially profitable. To the point where if everybody's doing something, there's not a lot of profit to be made in this. So when you're talking about adoption, it starts nobody knows about it to eventually everyone knows about it. Well, potential profit is the opposite, okay? potential profit is going to be up here. So when no one knows about it, let me make this a little thicker. How do I make it thicker? Oh man, I should have figured out this app before I jumped on here. There we go. Maybe make it a marker. Ah, no, I don't know. Okay, oh well, it's going to be thin. But when no one knows about a project, then the potential profit is really high. But as people start to find out about it, once you get that first tweet about it from like a big name YouTuber, the profit goes down. Okay, and then over time, more and more people find out about it, so it becomes less profitable until by the time everybody knows about it. So again, think about like bank accounts. By the time everybody knows about it, there's no more profit to be made. Okay, so you can see potential profit goes down over time as adoption goes up. So I'm going to draw one more thing on this chart, and that is, man, how do I make this? I want to make it thicker, like juicier. I don't know how to do that. I'll figure it out for my next video. But the third one I'm going to do is risk. R-I-S-K. Nice, easy word. Okay, and risk is basically like the odds that this project is a rug pull, or the odds that this project doesn't work out. Okay, or the odds that it's not sustainable. The economics, the tokenomics that they have set up are not sustainable. And basically the risk potential starts at the top and is just time. Okay, it's kind of a little bit correlated to adoption, but basically as time goes on, this project becomes less risky because it's proven itself over time. So the risk one is going to look similar to the profit one. It's kind of an inverse of, this is not a straight line because I don't know. I have very unsteady hands. I was terrible at the game Operation. But basically the risk of a project goes down over time. Okay, so it's going to be kind of inverse from adoption, and it's going to kind of look like the profit potential, which makes sense, right? Like usually potentially risky things have more profit. So like bank accounts have zero risk and zero return. Projects when they first start out have very high risk and very high return. Okay, so now I want you to look at this chart a little bit. Now, the projects that just started out, they definitely have the most potential profit. No one's adopted them yet. They're down here. There's no adoption. There's high potential, but there's very, very high risk. So that's what we've seen with all these Olympus forks and with Node Financial and all these. There's huge profit, huge potential profit at the beginning. If you get in early to something, you're going to make more money than if you get down the road somewhere. But the risk is also very high up there as well. So the strategy that I kind of have is I look for projects that are about in this range. Okay, I don't look for these projects that just came out last week. I approach this more as an investor rather than, I've like Ring Financial, I'll put a little bit into that just for fun. I consider these things, these high risk, high potential profit, these are just fun projects, okay? I'm not really putting a large amount of money into them. I'm waiting. I'm not an early adopter. If you think about Bitcoin in general, in 2017, 2013, I was saying I don't think Bitcoin's going to last, okay? I'm not a good future fortune teller. I am a late adopter. I'm just not this late of an adopter, okay? I try to adopt things in this range right here. So you could be a late adopter and I'm only going to get in the stock market, which has been proven over time, where there's a little bit of profit to be made and a little bit of risk in the stock market. But where I like to look is here. And this is where we're at in some of these projects that I talk about, like Strong Nodes and Olympus and Time, mining, some of the miners that I look at. I think we're in this range where we're not the first people to do this. People have been making money mining for years. Okay? And the potential profit is not as high as if I bought Bitcoin in 2013, I would make a lot more money than I do right now, right? If I had gotten in at risk here. But the problem is if you invest all your money here at this high risk, high potential profit spot is you lose a lot. You lose more than you win. So I prefer to wait until a project's proven itself, adoption's gone up a little bit, it has some tweets from some big name followers, the tokenomics have proven themselves out, and then there's this sweet spot right here. It's not mainstream yet. It's not a household name, but I buy the miners and I get in the projects that are right in this range. So I hope that just gives you some help understanding how I think through these projects. So I'm going to put a little bit into Ring. I'm going to put a little bit into these brand new projects. But if I'm going to put a big investment into something, it's going to be something in this range, like an ASIC miner, or like I said before, strong yield nodes, those things that have proven themselves. So I hope this is helpful. Go ahead and leave a comment below. Let me know what projects do you think are, at this phase right here? What projects do you think are in this sweet spot here? And what projects do you think are more over here, where they're fully adopted, there's not a lot of risk, and there's not a lot of reward? And where do you prefer different people are going to be at different places. I got lunch with my dad today, and this is not bad, by the way, especially Dad, if you're watching. It's definitely not bad. He's more in this place, okay? He likes more things that have been tested and true for a long time, that have lower risk and lower potential return. Some people like it back here. They like living in the fast lane where they're just finding the newest thing and getting in. But where do you see yourself kind of on this chart? And if you're just joining us, this chart's not going to make any sense, but watch the whole video and you'll get the full context. But thanks so much for watching. I hope you have a Merry Christmas, have some fun videos to share when we get back. But again, thank you.